and Market Infrastructure Briefing August 17, 2026. Disclaimer: news only. Not legal, financial, medical, or official advice. Anecdotal reports are for informational and entertainment purposes only. Story 1. Corporate Treasury and Cash Flow Management. Treasury AI meets tokenized liquidity networks. Clickbait headline: Treasury teams may never start their mornings the same way again. Corporate treasury management is entering a new phase as large financial institutions accelerate adoption of AI-assisted cash forecasting, tokenized liquidity products, and real-time treasury infrastructure. Recent industry developments indicate growing momentum behind tokenized money market funds, tokenized deposits, and blockchain-enabled liquidity management solutions that are designed to reduce settlement delays and improve visibility into cash positions. Treasury specialists increasingly view instant payments, ISO 20022 data standards, and agentic AI workflows as complementary technologies rather than isolated innovations. A notable trend is the emergence of Treasury AI systems capable of continuously monitoring liquidity positions, forecasting short-term funding requirements, and identifying operational bottlenecks before they become material risks. At the same time, major banking groups continue expanding tokenized deposits and blockchain settlement initiatives, creating the possibility of near-continuous treasury operations across global markets rather than relying on traditional banking windows. The broader implication is that treasury functions are evolving from reactive reporting centers into predictive command hubs capable of supporting multinational e-commerce ecosystems operating around the clock. Treasury management. +1. Legal subtopic: Treasury governance and fiduciary oversight. As Treasury automation expands, legal departments face growing pressure to review governance frameworks governing AI decision support systems, audit trails, vendor accountability, and digital asset custody arrangements. Regulators are increasingly focused on transparency, internal controls, operational resilience, and formal oversight procedures when organizations deploy automated treasury tools. Companies engaging with tokenized assets must also evaluate documentation standards, custody arrangements, and compliance obligations across multiple jurisdictions. Story 2. Enterprise Risk Management, ERM. AI governance becomes the centerpiece of enterprise risk strategy. Clickbait headline: The next billion-dollar corporate risk might not come from hackers. Enterprise risk management programs are rapidly shifting toward continuous AI governance as organizations confront growing exposure from autonomous systems, generative AI deployments, third-party models, and shadow AI adoption. Across global markets, risk executives are increasingly treating AI governance as a board-level concern comparable to cybersecurity or financial controls. New regulatory requirements and enforcement activity are forcing firms to move beyond annual risk reviews toward real-time monitoring models capable of tracking algorithmic performance, bias, operational failures, and model drift. Organizations are simultaneously confronting expanding risks associated with sophisticated phishing campaigns, synthetic identities, deepfakes, and automated fraud systems enabled by artificial intelligence. The practical consequence is that ERM functions are becoming more technology-centric, integrating compliance, cybersecurity, operational resilience, and data governance into unified oversight frameworks. In the coming decade, successful enterprises will likely be judged not only on innovation, but also on their ability to demonstrate trustworthy and explainable AI decision-making. +2. Legal subtopic: Liability in the age of autonomous decisions. With AI regulation entering active enforcement phases in several jurisdictions, corporate counsel are increasingly focused on accountability, documentation requirements, explainability obligations, and incident reporting frameworks. Legal teams are preparing for a future in which algorithmic decisions may face the same scrutiny previously reserved for human decision-makers. Story 3. B2B Payments and Infrastructure FinTech. Stablecoins move from experiment to e-commerce infrastructure. Clickbait headline: The payments revolution is happening behind the checkout button. The most significant trend in B2B fintech continues to be the migration of stablecoins from cryptocurrency ecosystems into mainstream payment infrastructure. Payment networks, fintech platforms, and treasury providers are investing heavily in systems capable of managing stablecoin-based settlement for global commerce, corporate payouts, supplier payments, and cross-border e-commerce operations. Industry observers note that businesses are increasingly attracted by faster settlement times, improved liquidity efficiency, and reduced friction compared with traditional correspondent banking models. Strategic acquisitions, infrastructure partnerships, and payment network initiatives suggest growing institutional belief that multiple forms of money, including fiat, stablecoins, and tokenized deposits, will coexist within future payment ecosystems. E-commerce merchants and marketplaces are also exploring wallet-native checkout experiences that can interact directly with regulated digital payment rails. The result is an emerging financial architecture in which value moves continuously across borders, potentially supporting a future digital economy extending far beyond Earth's conventional commercial centers and into increasingly interconnected global and space-based economic systems. FinTech News. +3. Legal subtopic: Stablecoin compliance and payment regulation. Legal focus remains concentrated on licensing frameworks, anti-money laundering controls, sanctions compliance, consumer protections, reserve management requirements, and cross-border financial regulations. Payment providers must increasingly demonstrate compliance readiness as regulators transition from experimental oversight to operational enforcement models. Story 4. RegTech, Regulatory Technology. Compliance software evolves into real-time regulatory intelligence. Clickbait headline: The compliance department is quietly becoming an AI control tower. RegTech is transforming from a cost-saving back-office utility into a mission-critical operational layer for regulated enterprises. Financial institutions face mounting pressure from expanding reporting requirements, changing digital asset regulations, emerging AI governance obligations, and heightened enforcement expectations. In response, firms are investing heavily in platforms capable of continuously monitoring regulatory updates, mapping obligations to internal controls, and generating audit-ready documentation. Industry analysts are increasingly describing compliance as a data challenge rather than a paperwork challenge, creating a favorable environment for machine learning-powered monitoring systems. The next generation of RegTech platforms is expected to combine risk analytics, governance oversight, sanction screening, transaction monitoring, communications surveillance, and policy management within unified ecosystems. For e-commerce companies operating across multiple jurisdictions, these systems may become indispensable as digital trade expands and regulatory complexity accelerates. The strategic value proposition extends beyond avoiding penalties, positioning compliance intelligence as a competitive advantage capable of supporting faster international expansion. RegTech Analyst. +2. Legal subtopic: Machine-readable regulation. Legal professionals increasingly discuss the possibility of regulations becoming structured in formats that software can directly interpret and operationalize. Such developments could reshape regulatory reporting, compliance verification, and enforcement processes throughout financial services and e-commerce sectors. Story 5. Institutional trading and market infrastructure. Tokenization pushes global markets toward 24/7 trading. Clickbait headline: Wall Street's biggest transformation may happen while markets are closed. Institutional trading and market infrastructure are experiencing profound changes as tokenization initiatives move from pilot programs toward production-scale deployment. Exchanges, clearing organizations, custody providers, and financial market infrastructures are increasingly experimenting with systems designed to represent traditional assets in tokenized form while preserving regulatory safeguards. Recent industry milestones suggest growing confidence that tokenized securities, tokenized collateral, and programmable settlement mechanisms can coexist with existing market structures rather than replacing them immediately. Market participants are especially interested in reducing settlement friction, improving collateral mobility, and enabling more efficient liquidity allocation across global financial ecosystems. Simultaneously, infrastructure providers are exploring models capable of supporting extended trading hours and eventually continuous market access. The long-term vision points toward globally interconnected financial networks operating with greater automation, transparency, and interoperability, laying technological foundations that futurists believe could eventually support commerce spanning Earth, orbital economies, and emerging space industrial activity. DTCC. +3. Legal subtopic: Digital Asset Market Structure Rules. Regulators continue evaluating custody standards, settlement finality, investor protections, disclosure requirements, responsibility allocation, and operational resilience standards for tokenized markets. Legal certainty remains a decisive factor in determining the speed of institutional adoption. YouTube video description. Welcome to the August 17, 2026 Treasury, FinTech, RegTech, Risk Management, and Institutional Markets Deep Dive. Today we examine the biggest developments across corporate treasury modernization, AI-driven enterprise risk management, stablecoin-powered B2B payments, next-generation regulatory technology, and the tokenization of global financial markets. Discover how AI, digital assets, real-time settlement systems, and advanced compliance platforms are reshaping e-commerce, banking, capital markets, and future global commerce. This episode also explores the legal implications surrounding these trends and examines what investors, operators, technologists, and market observers are watching next. Disclaimer: news and commentary only. Not legal, financial, investment, medical, or professional advice. Suggested video tags: corporate treasury, treasury management, cash flow management, enterprise risk management, AI governance, FinTech news, B2B payments, stablecoins, e-commerce payments,